Welcome to Crescat's Market Call, featuring our macro and activist mining research. I'm Kevin Smith, Crescat's founder and chief investment officer. Before we get started, please read through our important disclosures being shown now. These and additional disclosures regarding the risks involved in the type of investments we will be discussing, as well as the fund's performance, can be found on Crescat's YouTube channel or on our website using the QR codes on the slides. The type of investments discussed on these videos can carry significant risks, including risk of loss. The videos are intended to be general discussions of macro investment themes, the mining industry, and news with respect to the companies in our activist metals portfolio, and are not intended to be investment advice or an offer of investment advice or services. Crescat's managed funds only accept accredited investors, and the discussion in these videos has been prepared with that level of audience sophistication in mind. Any forward-looking statements may or may not come to fruition. If you enjoy our videos, please click on the like button and make sure you are subscribed to our YouTube channel to get notified of upcoming episodes. You can also follow Crescat Capital on X for ongoing macro research and important news updates on our activist metals positions. If you want to learn more about Crescat's investment strategies, we encourage you to reach out to our head of investor relations, Merrick Iwahashi. His contact information is on the screen now, and it can also be found on our website at crescat.net. All right, welcome everybody. You've got myself and Tavi here live today. We've got Quentin pre-recorded a segment last night, and so here we go. It's nice that things have gotten a little more exciting in the markets, and what we have seen over the past 2 weeks is 4 Hindenburg omen signals. Now, what's a Hindenburg omen? Let's go on to the next. Hindenburg omen is as a signal, a technical signal in the market when it's triggered in clusters. It's preceded some of the major market crashes that we've had going back to 1985, including 1987. And there was a pre-Black Monday cluster where the Dow fell 22%, right ahead of the dot-com bust. There was a cluster of signals before March of 2000, and in the pre-financial crisis in 2008, there was a cluster in 2007, and so on, including some more recent ones in 2018 and 2020 ahead of the COVID crash. And so what exactly is a Hindenburg omen? Well, it's a combination of basically 3 different technical signals. And the first is that the market is hitting new all-time highs, or is extended relative to its 50-day moving average. Let's put it that way. And at the same time, you're seeing a divergence in terms of the breadth of the market. So the breadth of the overall market is negative and going down at the same time as the market overall is strong and going up. So deteriorating breadth, that's something we've been talking about here over the past couple of sessions. And then the third major thing is that you have a combination of both new highs and new lows going on at the same time. So there's already above a significant level of new stocks making new lows, new 52-week lows, I think it is, at the same time as there's still a number of stocks making new 52-week highs. So it's those technical divergences, and yes, there are times when Hindenburg omens, provide a false signal and you don't get a market crash, and there's plenty of those too. But when they occur in clusters, and we've had 4 of them now, and just in the past 2 weeks, they tend to have a much higher degree of significance. And of course, what we've been talking about here, the record valuations in the U.S. stock market and the S&P 500 with the mega cap concentration, et cetera. When you have these coinciding, coincident other fundamental indicators, and we'll talk about a few more of them here, it just is even more of a setup for a potential, major market correction or even a crash. And so, it's not just about valuation. We have a lot of technical signals going on here too that concerns us about the risk, the downside risk in the overall U.S. stock market today. Let's go on to the next. So one other signal that we saw today in the overall economy was the Challenger Gray and Christmas job cut announcement report, which was the worst month since back in 2003. So the October job cuts, this was some data that just came out. It was either today or yesterday. Look at the rapid surge in job cut announcements, and it's mostly led by the warehousing and technology sectors. So let's go on to the next. And so here's David Rosenberg again talking about. He's saying not a bubble. Well, look at the chart below. For the first time ever, median value of equities on personal balance sheets has topped $300,000, more than tripling since April of 2020. Meanwhile, consumer sentiment is lower today than the lows of all 11 recessions back to the early 1950s. Then again, who needs a job or a paycheck when we have a bloated stock portfolio? So the very recent record all-time highs in the stock market, along with record valuations, is boosting personal balance sheets, a wealth effect that's still, that may be one of the last things that's really holding up this overall U.S. economy right now, along with perhaps the AI capital spending euphoria. But let's go on to the next here. And so Jim Bianco put out a chart today, similarly showing the Michigan consumer sentiment, which also just came out, I think today, showing a new all-time low in Michigan consumer sentiment. This is what David Rosenberg was just referring to as being worse than all 11 recessions. So what is it? You've probably heard a lot of people talking about the K-shaped economy, and here's Jim Bianco trying to draw a K-shaped representation of that. On the one hand, you have once again the stock market near all-time highs and boosting that wealth effect on personal balance sheets at the same time as the average, the median consumer is the bulk of the population. Maybe this is the kind of an illustration of the top, the divergence between the top 1 or 2% of the folks in the economy versus the median consumer, and with the equity markets kind of being the last thing that's holding it up for everybody who's invested in stocks at all. But there's a lot of people who aren't even invested in stocks, and if that's the last thing holding it up, I mean, we're basically in a recession. We're going to go into one of the biggest, nastiest, deepest recessions that we've probably ever seen if we get this if we get a significant stock market correction. So let's keep going here. So a lot of people still, have been asking us, since we have this activist metal strategy and this precious metals fund, up until recently, and even still, the precious metals mining stocks are leading the stock market among all industry groups in the marketplace, even after the pullback we've had recently. But people are saying, is it time to sell our gold stocks? And I mean, we think it's anything but. And I want to make the case that that there's three comparable periods in the history of the U.S. stock market that I think are most comparable to where we're at right now. And those other three periods were record valuation, mega cap U.S. equity market highs, which we are basically still at, and at the same time as it was still very early in a we haven't even seen the really the bull market for gold mining, for gold, silver, hard assets, and mining stocks. We had very early. So one was 1929. A lot of people have seen the Shiller Cape ratio comparisons to 1929 to 2000 and to recently back in 2021, record all-time highs or near it for Shiller PE Cape ratios, and there's just no question that this stock market is overvalued to an extreme. But what's the point about gold mining stocks? The point is that in three of these market conditions, and the first I'm showing here is from 1929. I mean, yeah, gold stocks went down in the initial 1929 market crash, but look, it was just a blip, and look at how they continued higher. And in home stake mining stocks were just about the only industry group that went up during the Great Depression. And this is home stake mining. It increased 580% from the Dow's top into 1936. Meanwhile, from the peak of the market and on September 3rd of 1929, the Dow Jones collapsed 89% to a low on July 8th of 1932. That was the worst of the crash, but over that period, home stakes still went up. It went up 48%, and then continued up through the rest of the Great Depression. So let's go on to the next here. That second comparable period is the Nifty 50 large cap U.S. equity bubble, and it was a mega cap tech bubble back then too. That was in 1972 when those stocks peaked at 50, 60, 70 times earnings, and the S&P 500 would go down 50% over the next 2 years. Meanwhile, from November 1972, November 17th to August 16th of 1974, the Barron's Gold Mining Index rose 376%. Over that same time period, the S&P was down 34%. So yes, when we get that initial correction, can gold stocks go down? Well, and yes, it can, like it did in 1929. But look here in 73, no, they just went up, 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 up. And this is the type of market that we are looking for. That's why this is our primary hedge in the global macro fund, where we're long our activist metals portfolio, and we are short the S&P 500, the NASDAQ 100, select Magnificent 7 stocks through put options. And you probably also heard Michael Burry announced put option positions in Palantir and NVIDIA, famous for the big short. His timing on making that announcement was pretty good here recently. But let's go on to the next. There's one other period that's highly comparable to today, and it was the tech bubble in 2000, the .com bubble. Then the gold mining bull market began a 10-year bull market, really at the same time as the S&P 500, and especially the NASDAQ started to began its collapse. The biggest part of the collapse in the NASDAQ was in 2001, and from 11/13 of 2000 until just prior to the global financial crisis in March of 2008, the XAU index, that's the Philadelphia Gold and Silver Mining Index, the large cap mining index, it rose 393%. At the same time as over that entire period, the NASDAQ composite was still down 27%. So it's really important to understand that gold and gold mining stocks can act as a counter-cyclical instrument relative to the stock market at large. When you're starting from record U.S. equity valuations, now everyone's afraid what's going to be 2008 again, and the gold mining stocks are going to go down like they did then. Well, we've a lot of the smaller cap mining stocks where we're focused on the exploration and development stage stories are trading at valuations that are basically akin to the lows of the 2008 global financial crisis. And look, that 2008 only happened after what you're seeing here, after this record bull market run from 01 until early 2008, and it was ripe for a correction back then. But that was after a 7-year run. We're only in the first couple of innings of this mining and metals bull market in our analysis. And even after that 2008 crash, the gold mine stocks came roaring back in 9 and 10. And so there was a 10-year bull market. We think we're still in the early innings of another 10-year bull market. Why? Because we haven't even seen the crash yet, or the big meltdown, which we believe is still coming for the S&P 500 overall. Let's go on to the next. Just want to show this chart, which is now updated through September 30th. And, it shows our global macro fund, which will have a 20-year track record at the end of this year. It's basically a 20-year track record where since its inception in 2006, January 2006, among all macro hedge funds that call themselves discretionary macro hedge funds in the Preqin database, or maybe it's the eVestment database. It's one of those two. It's in the notes down there. This fund is, this fund has not only the best absolute return over that 20-year period, but it also has the best downside capture ratio. What does the downside capture ratio mean? It means on average, when the stock market goes down, that a negative downside capture ratio means on average historically that our fund has gone up. It's like our fund is up today and the market's down today. The global macro fund, that is, and our long short fund. So we are proving that we can still maintain this negative downside capture when you need it. So what is the time to sell? It's time to sell the S&P 500. What's the downside capture ratio of the S&P 500? Well, it's 100%. When the S&P 500 goes down, 100 goes down by 10 or 20 or 30%. It goes down by that much. That's a 100% downside capture ratio. So, we'd ask people to consider, if you're concerned about the market risk and you're looking for counter-cyclical exposure on the long side, as well as exposure that can make money when the market goes down, we're asking you to consider our global macro and our long short hedge funds. If you're looking for that long precious metals exposure, we've also got the precious metals fund. That's it for me. Let's flip it over to Tavi.
Sorry, 1 second here. All right, well, let's get started. Lots of interesting developments happening, particularly in South America and specifically in Bolivia. If maybe some of you have noticed or not, but Bolivia had elections recently, and Rodrigo Paz's became the president, and he's going to have his inauguration tomorrow, actually, if I recall it correctly. And this is arguably one of the most exciting things, at least that I've seen, in terms of a shift of an economy that has been completely, I would say, perceived as uninvestable from most institutions, and could be seen a Milei moment, if you will, Milei from Argentina. Argentina, on the other hand, which has been seen a drastic shift from political leadership economically, attracting capital from foreigners. Stock market has been doing very well. But also what you're seeing there is the Trump administration has been in close ties with Milei's administration as well, providing swap lines, investments, all sorts of collaboration to help the country to become sort of a template, and it has become a template for South America. The problem with that research or that analysis that people have assumed that Milei is a one-off case or a unique case, and it couldn't be farther from that. It's not a one-off case at all. We saw El Salvador actually even earlier than Milei have a shift with Bukele, and now we're seeing Bolivia, which had a runoff elections of between two parties that were more one was more center business oriented, which was Rodrigo Paz party, and the second president candidate at that time was more of a right wing individual. And right now what we're seeing is potentially a shift in the libertarian movement inside of Bolivia that we haven't seen since Rodrigo's death in the 80s. So decades of capital that has been has completely neglected Bolivia in a long time. We can speak for this personally, given the fact that when our presence in Bolivia and San Cristobal's investment and speaking with institutions at the time and their reluctance just a few years ago of investing in the country. And by the way, some of that for the right reasons too. And we've seen a lot of negative stories in Bolivia over the years. But this is an incredibly exciting change. I think, we thought we did, a very, I would say, prudent move by investing very early in the cycle that we believe to be in for precious metals. If you recall, when we invested in this, with silver was trading in the teens I think it was maybe sub $14 an ounce or so, and so that was one part of it, and then of course the assets, the quality as well was another aspect that we certainly had a strong view. But even in my wildest dreams, I never thought that what would actually be one of the most important drivers of that whole region would be, the fact that we're seeing a shift in politics. And remember, this is one of the countries. Just some stats. I mean, this is a $50 billion economy. There's about the amount of land that Bolivia has is actually larger than Venezuela, and slightly larger. With the same amount of GDP. And of course, we know that the politics in Venezuela, don't have to highlight that aspect. But what we are about to see is one of the most unexplored regions in the world, about to see some big or potentially a transformation in that aspect, which I think is going to be very relevant. So think about valuation of things when they go from completely uninvestable to open for business. I think that's it's a very difficult exercise to do in your mind, but that's exactly what I think it's going on here. And I would not, I think it's one of the most important things happening in South America. So Chile is going to be having elections here soon. We're going to be seeing that shift potentially as well. And then Brazil is going to have its own moment as well, probably about a year from now. And that's my view, at least. It's remarkable what's happening. And the picture you're seeing on the right side of this slide is Marco Rubio meeting with Rodrigo Paz. Marco Rubio, the Secretary of State of the United States. And you can see that they have agreed on helping to solve the fuel shortage issue, which has been essentially causing all the problem that we're seeing in regards to inflation. Not only that, what we're seeing recently, from I had a few calls, and I'm not going to name people here, but I had a call yesterday with a close contact in Bolivia that is also telling us that there's going to be a lot of reforms, tax reforms, very likely to happen. privatization of companies that are currently state-owned companies. This is going to be a transformation. And right now, there's an event happening in Santa Cruz where you have, I think it's over 2,000 entrepreneurs of the private sector in Bolivia meeting with the president at the moment, which is also very, very exciting. So stay tuned. I think this is going to be a very good development for the whole region, but particularly for the country, which is exciting. It's a country that hasn't seen foreign capital for a long time, and I think this is going to be a major shift. Let's go to the next chart. It's just looking at the Latin America stock, the ETF, which has a very strong or high heavy weight in Brazilian equities. Which you can argue it should be more balanced with other economies like Argentina, which barely have any weight in this ETF. Mexico has some weighting, but no, I'm not going to be too cute commenting on that aspect. But the aspect what I would like to highlight is the fact of how much we're seeing of outperformance of Latin American stocks versus U.S. equities. And to me, this is the beginning of a market finally realizing that this is a very important change in landscape of this whole region, economically and politically. So stay tuned. And remember, I mean, this is a part of the world that certainly has very strong correlation, historically speaking, with commodity prices. And I love when you can find a low PE multiple, which sometimes and a lot of times a low PE multiple is there for a reason. But when you can find a compressed multiple alongside with a growth potential, either because you're seeing political or economic changes, or just the fact that you might be in a commodity bull market or just a metals bull market or energy bull market, wow, I mean, that's when you see growth with low PE ratios is usually linked to explosive moves. And so, just my 2 cents, and that's why I like the setup in that region. Let's go to the next chart. Just a quick chart of the Brazilian equities today, and we're seeing, this month. It's just the beginning of the month. It's the first few days of the month, actually, first week of the month, and you can see that we started to break out. If you really zoom in, you're going to see that the prior month we saw a breakout in this chart. It all depends on how you draw the line, but technically we did see a breakout, and now we're seeing a follow-up of that move. And usually these moves tend to gain some momentum, and I believe that's going to be the case. And so very exciting, all in line with these changes that we're seeing. Let's go to the next chart. I'm going to leave this topic to Quintin because he's going to touch on this a lot more in depth. All I'm going to say, this is extremely exciting. Silver now considered a critical metal in the U.S. I've heard of a few people saying to me that less presentation. I had a chart of the gold to silver ratio going back, I think, 300 plus years, and someone came up to me and said, well, Tavi, this ratio is going to stay high because silver has become a lot more industrial than it used to be in the past. Well, let's unpack that for a minute. Isn't that actually an extra factor to be excited about, that ratio falling? The fact that silver has become has had a very strong industrial demand only adds to the demand factor of the metal. And my view is that if gold was trading at $500 an ounce, which all of us know it's not, it would certainly be considered an industrial metal as well. All of us would like to be using gold. It's the most useful metal in the world, but it's lack of supply, and it gets a wrong interpretation as a metal itself by a lot of people that tend to say that it's a complete it's a pat rock, or it's not useful, and it couldn't be further from the truth as well. It is the most useful metal. It's why it's actually a currency. And the same thing goes for silver. What we're seeing is basically this industrial demand, to me, is a floor on the demand side. That's how I would see it. silver goes a lot higher, it's going to become more monetary, monetarily driven, and when it comes to demand. So that's the exciting part. But I'll leave it to Quentin to comment more on this. Let's go to the next chart. Next chart is a form of potentially gauging, where we are in the cycle recently, and when it comes to the valuation of mining companies. I think Kevin commented, folks that have been asking if this is the time to be selling gold stock. Well, let's look in history. Where have we been in history in prior peaks or prior times when there was a significant relevance of this overall industry, and right now we're about 4% of when you include gold and gold miners relative to the total global assets. My guess is we're going to see multiples of that. This is just my opinion. Why is that? Just because we saw in the past, partially, but also because the imbalances we have that tend to drive gold prices are significantly worse than we saw back then during those other periods. So I think that's going to be substantially worse, and therefore one of the unintended consequences of those things tends to be that the gold and gold miners' percentage of total global assets should be substantially higher as well. Let's go to the next chart. On the next chart, we're looking at the S&P 500 sector percentage weight. This is potentially a big rotation. Is still ahead of us, in my view. You're looking at the resource sectors that I'm using here are energy and materials. And then on the red line, you're looking at infotech. Infotech back in the early 2000s peaked at about 34%. And the resource sector is actually bottom at around 7%. Today, as you can see here, we're a lot worse and much more extreme on those two problems. And I think it's not the end of, remember, this is exactly what happened during the tech bubble, right? The reason why technology became such a large percentage of the overall market and the resource space became such a small amount of is because technology basically sucked all the capital from the market and from investors. And today we're seeing something very similar. I think the big difference today that makes the white line be even more attractive than back in the early 2000s is that the reasons behind this red line increase that have been sucking most of the capital is because of AI. And AI, as we all know, and continue to hear in the news, is one of the most capital intensive changes we've seen technologically over history. And so you would suspect that what is the foundation of this innovation and in revival of manufacturing is going to be, in my view, the resource sector, which is yet to receive the capital that is needed to provide all the resources or the supply that we need when it comes to commodities to build all the infrastructure that is needed. So anyways, let's go to the next chart. Next chart, we're looking at what's happening as well with inflation. There's not a lot of data on inflation recently, including the data that you're looking at the screen, which is the white line. The CPI has not been reported. And given the government shutdown, which is now the longest shutdown we've seen in history. But what is important here is the red line is a great gauge when it comes to especially a leading indicator for consumer price index, which is, again, a lot of, especially the gold guys, tend to ignore CPI. And I wouldn't I wouldn't completely ignore CPI because it is used for policy. So you want to understand at least, although it's difficult to understand, given the fact that it seems to be so suppressed relative to what's real inflation, as we all know. But nonetheless, it does seem like CPI could be reaccelerating here in the next few months, which would put, and if I have a gun to my head, actually on macro issues that could really cause things to derail when it comes to declining equity markets, I actually think it's an inflation reaccelerating situation where puts Trump administration in a very difficult position to justify the rate cuts that we're seeing. And so, I think that's a possibility given what we're seeing. There's other signs of inflation starting to reaccelerate as well. If you go to the next chart, there's a real gauge. Oh, I thought I had it. Maybe it's going to come up here soon. It's okay. Probably go back. Yeah. If it comes back, I'll talk about it. But in line with this inflation idea, let's talk about what's been happening with the PBOC, the Chinese central bank, because it's in line with inflation that we're seeing globally. Remember that what we're seeing right now when it comes to the PBOC actually starting to net purchase government securities. This is a way to say that QE, quantitative easing, has been resumed in China. And you may say, well, it's a small number, especially in yuan terms, but and they'll disagree. But the direction of the policy is the more important thing, and the fact that we may see likely the continuation of that trend. In fact, now I'm going to show the most important chart of this presentation from a macro standpoint. What we're seeing here, next chart, is that the PBOC is about to surpass the Fed when it comes to having the largest balance sheet in the world. What does that mean? Clearly the red line is inflecting higher, which means that they're expanding their monetary base in China. We're also seeing this. Of course, what's happening with the repo market in the Fed may actually cause a change in direction of the white line. We've had a few Fed members already comment on that, the potential of a reversal trend of that white line and potentially starting to rise, given the fact that the repo market needs further liquidity support. And we've seen even a few analysts talk about potentially $200 to $300 billion needed annually on the Fed balance sheet, just to make sure that the repo market has its plenty liquidity to survive here. So, what's the bottom line? The bottom line is all these it's not just the Fed. It's happening across the globe. In fact, the Fed balance sheet or the PBOC balance sheet is just a part of the picture. If you go back and look at the money supply, which is a bigger and broader way of looking at credit overall and money circulating in the economy, since 2023, so October 2022 was when the market actually bottomed, if you recall. Guess what happened during that time? That was also a time when China's money supply started to also rise. But nobody noticed this, but China's money supply increased by about $11 trillion, 30% increase in money supply in 2 years. And the U.S., on the other hand, has increased its money supply by about $880 billion. Just to put into perspective, so 11 times factor of the Chinese economy in terms of increase of money supply. So in discipline, when it comes monetarily and fiscally, it's happening across the globe. And, to me, what the bottom line is focus on hard assets. Anyways, let's go to the next chart. That's the real-time inflation gauge from True-Flation in the U.S., which we're seeing pick up here recently. Is that enough to say that there is a major shift on things? Not enough yet, but clearly there's been a trend since March and April where this chart has been trending higher. So pay attention to it. This could be, this is starting to become an important issue here, and potentially could become a bigger issue for the market as well. Let's go to the next chart. Well, the next chart is something that is probably one of the most important things happening in terms of a narrative that I think people should focus. This chart is looking at the commodities equal weighted index and versus the Fed funds rate. And the Fed funds rate is in red, and almost magically at the same time, as you can see in the chart, when in 2022, the white line, i.e. the commodity sector or commodity equal weighted index, peaked during the Russian invasion in Ukraine and so forth. But what really was happening at that time as well was that the Fed started to hike rates, and that caused the whole market in commodity space to really implode. And today what we're seeing is that commodity prices are reaccelerating, about to retest those highs of 2022, but we have a very different monetary environment. We're actually experiencing fiscal dominance firsthand as commodity prices reaccelerate. So when you think about this, it really reinforces the macro tailwind that we're seeing for commodity prices. My view is that we're going to see significantly higher prices in a breakout in the white line from its prior highs. And so stay tuned. That's just my 2 cents. Let's go to the next chart. And what's remarkable about what's happening as well is that when you look at the WIRP, which is a function on Bloomberg that looks at the probability of investors, probability that investors think that where Fed funds rate will be, depending on the time frame you want to look at. If you looked at the focus, I should have put a line there, but if you focus on October 2027, what you find is that we're still at, they expect that, or in other words, 2 years from now, the Fed expects that, investors expect that the Fed funds rate would be above 3%. Now, if you ask my opinion, I don't think we're going to see that at all. I think we're going to see substantially lower rates. This is for those in the macro world, that's a big call actually. Because what I'm saying is something that is very mispriced in a in a very liquid instrument, as you can see here. So potentially one of the most liquid instruments in the world. And so I think this is going to come down to the U.S. normalizing the global standards when it comes to interest payments to GDP. Right now, we're surging the interest payments to GDP. I don't have to school anybody on that, but it's about 4 to 5% when the rest of the world is sitting on about 1 or 2% on the same metric. So we're going to go back to 1, 2%. We got to take interest rates back to 1% or less. Maybe we'll go back to a 0% interest rate world. But the most important thing is inflation is reaccelerating. Commodities are reaccelerating in prices. And the Fed is being forced to cut rates in a big way. That's fiscal dominance. That's financial repression, whatever you want to call it. This is clearly not the Fed. If the Fed's mandate was what they claim it is, which is inflation, they should not be doing this. And the reason why they're not doing this is extremely meaningful for an investor, because it's clearly that they have changed their views about their inflation target, whatever that means. I mean, inflation target, we've been about 5 years now where the CPI has been above their 2% target. 5 years. And we're now going to start lowering rates when the target. So does that mean that their target is no longer 2%, is maybe 3 or 4? I don't know. This is bizarre. We know that the easiest are potentially the least painful path to grow out of the debt is really inflating our way out. And so this is probably what's happening. Let's go to the next chart. Almost done. Another thing is important to see is the Fed talked a lot about their composition of their balance sheet and how that can change, and how the duration of the Fed's balance sheet could actually be reduced substantially to match more of what the Treasury has in terms of duration. Well, if that's the case, man, we've got a long ways to go here. The Fed's ownership of T-bills is now 3%. Used to be 12% not too long ago in 2020. So, we could see multiples of this to change. So stay tuned. This is also liquidity in the system. So something important to definitely be looking very closely. Let's go to the next chart. India has been continue to purchase a lot of gold. We did see recently that they also changed some of the regulations in the country to allow silver to be used as a collateral for loans. What's my take on that? Well, there's a lot of different things. I mean, they're going to use a collateral loan or a leverage ratio between gold to silver of about 11 times when the market is at about 80, right? So gold to silver ratio is about 80. And the bank is going to accept silver collateral in a 11-to-1 ratio between gold to silver. So it's very interesting what's happening there. India has a lot of incentives for silver prices to be higher. They face a lot of issues with inequality, and most of the people in their population that own silver are actually the lower classes. And so for them to unleash more capital in the system, one of the ways is allowing that part of the population to to really use that capital or those jewelries in silver to consume more. And that's precisely what's likely to happen. I saw calculations of about up to $500 billion that could unleash of capital every year on spending. So it's not a small amount. So it's clearly something very significant and in line with we know that India as a society is very attuned to the idea of owning hard assets, particularly at a time when inflation has to eventually run hotter than expected, just because of the amount of debt we have globally in the system. Let's go to the next chart. This is one, for those that like macro ideas and thoughts. It's a thought that I'm having. I'll develop on this in the next 2 slides after this one, and probably going to be done. Basically, we're looking at the U.S. 10-year yield at white line, and the other red line is looking at cyclical stocks versus the S&P 500, which we're seeing, as we said, about the breadth issue and all these issues happening in the equity markets in the U.S. that could, still drive markets a lot lower. What is interesting as well is that there's a strong correlation when cyclical stocks are going up relative to the S&P 500. You expect the 10-year yield to be rising, and we're seeing that correlation or that link between these two things change, which means that potentially it is suggesting that at least in my view, that the 10-year yield needs to fall off further because the cyclicality of the market is weakening substantially. And so, stay tuned here. I do think the 10-year yields are going to fall substantially from this current levels. That's also a strong view. Let's go to the next chart. And why is that? Something no one is reporting. No one is the fact that the UK has purchased a very significant amount of treasuries recently, the largest amount in 15 years, $160 billion worth of treasuries. I do think this is your Mar-a-Lago Accord happening right in front of our eyes. And potentially these economies are looking for ways to, and I don't know what the agreement really is. I'm not going to pretend I know what it is. And I don't think anybody knows what it is unless the people that are involved with those decisions. But I do think there's something happening that is basically in exchange for some sort of favor to allow U.S. treasuries to be purchased by these central banks and potentially also improve the situation when it comes to the 10-year yield, having more demand and lowering rates overall in the U.S. The whole curve in the U.S. needs to be substantially lower given how much debt the country has. Let's go to the next chart. Another country that has been doing this is Spain. Spain's ownership of U.S. treasuries increased the most ever in 1 month. So that's also happening in a big way. It's another way of looking at the Mar-a-Lago Accord potentially happening right in front of us. So yes, this is a big change. So if you think about what's happening in the 10-year yield side, I do think we're going to see substantially lower long-term rates in the U.S. as well here in the near term. Let's go to the next chart. I think I'm done, but maybe there's a little more. No, I'm done. All right, let's go to Quinton's side of the presentation.
Hello, folks. I am making this video through recording. It is Friday morning, early Friday morning, over in Europe. I'm traveling once again. Can't get away from travel this year. It seems like it's almost endless. But I'm making this video through recording. So if for some reason there's any news releases that came out on Friday morning that came out after I made this, they're not in this update that I'm going to give today. But I'll be able to cover a lot of stories that have come out with news over the past 2 weeks. It's been a very interesting couple of weeks. I think one of the things that keeps catching my attention, it seems like every other day that you wake up, you see some announcement that some metal has joined the critical metals list. And at this point, in summary, I think just about every metal on the periodic table is part of the critical metals list. And you step back and you think about that, it just seems astonishing that that the mining industry, the metals that we need every day, have now garnered so much attention, which is good. I'm not complaining. We see metals that we think about almost or don't think about really join this critical metals list on a routine basis. You saw silver and copper join the list here recently. Are silver and copper critical? Yes, absolutely, absolutely. Goes without saying. It's just funny that these metals that were taken advantage of, like nobody thought about, are all of a sudden very important. And you got to ask yourself why. I mean, it's interesting that the United States in particular sees so many of these metals on the periodic table as critical. Well, I guess what I would say in summary is that we've neglected the mining industry and more than just the mining industry. Really, it's the mining and refining industries so much over the past several decades that we've gone from a position, say, after World War II, where we were fully capable of providing the metals that we need for our industries, to basically becoming reliant. We've exported our refining industries and even mining industries overseas, and we've become almost entirely reliant on virtually everything. And it's such a sad state to see a nation give up its integrity like this. But that's what happened. A lot of people talk about rare earths today. Rare earths happen to be the top line of the two green lines that you see down there. They're what we call the lanthanide metals, the lanthanide elements. And they form that row from 57 to 70. That's down there towards the bottom of this chart. Rare earths are not rare, first of all. There's lots of rare earths around the world. Rare earths, where do they come from? Well, right now, most of the refining capacity in the world is in China. Okay, now how did this happen? How did this come to be? The United States actually developed some of the first real, technology, and it's very complicated technology to develop or to refine rare earth metals. And this occurred way back in the 1900s. And those refineries, many built after the Second World War in the 50s, 60s, 70s, and 80s, those refineries came about through a great deal of research by folks in the United States. I believe it was General Motors, of all companies, that actually had the biggest rare earth refining capacity in the United States up until the mid 1990s. And then guess what? They started to export the technology, export the factories that were needed to refine rare earth metals to China. That happened gradually, and then as time went on, it became more suddenly. In other words, the refining capacity in China skyrocketed over a few years. And the Chinese recognized that between the refining capacity that they were building in their country and the fact that they have really the cleanest, source of refinery feed. This is material that has rare earth metals, that's clean, suitable for refineries. Those deposits that produce that feed are in China. They're called ionic clay type deposits. Well, China has huge reserves of clay type deposits. These are deposits that are found at surface. They don't necessarily contain huge concentrations of rare earth metals, but they have a disproportionate amount of heavy rare earth metals, the ones that are probably the most desired in this industry, and they leach very well. So basically, the property that they can be readily leached, is a very key characteristic of these clean ionic clay deposits, because they don't bring along things like uranium and thorium with them. Okay, so it's very important. There's no uranium and thorium in rare earth concentrates, and the Chinese deposits don't have uranium and thorium. So guess what? We basically handed over all our knowledge about refining capacity to China, and then they developed their huge ionic clay deposits. And guess what? They became the world's biggest rare earth supplier, and that's really been their strategy for many years now. It's to dominate the rare earth supply, and then hold it. Basically have a stranglehold on these critical metals and in the world supply. It's not that they're rare. It's just that China has a very tight constraint over the world's ability to source these metals, especially highly refined metals. What do we do about it? Well, now we're saying, oh, gee, here in the United States, we need to go out and find new rare earth deposits. Not really, okay? There are rare earth deposits, ionic clay deposits outside of China. There happens to be a big deposit found in Brazil not too long ago. I was working with the Japanese government back in 2019, 2020. We found a deposit in southern Brazil. It's an ionic clay deposit. And this deposit has all of the great characteristics of the Chinese deposits. It's clean. It has a lot of heavy rare earth metals. This material, the clay, is readily leachable. The metals come straight off through weak solutions, and it doesn't have any uranium and thorium. It's really almost idyllic for producing concentrates that would be needed by a rare earth metal refinery. Well, that's great. Okay, so basically there are sources. There are ionic clay deposits outside of China, but here's the catch: we don't have the refineries like we used to, especially in the United States. There's just hardly any of them. There's a couple small ones in Japan, virtually nothing in the United States. Okay, there's a lot of companies that beat their chest and say, "Oh, we've come up with some, highly proprietary, technical means of extracting or refining rare earths." Is usually a bunch of hooey. Okay, if those companies that tout their ability to refine rare earths were for real, we wouldn't be in this problem. Think about it for a minute. There've been rare earth companies telling us that they have proprietary refining techniques for over a decade now, probably 15, 20 years. And we don't have the rare earth supply. Why? Because we don't have the refineries like they have in China. And we need to build those again. Okay, now they're very complicated factories. They're very, very complicated chemistry that's needed to produce rare earths. What does that mean? Well, it's probably going to take about 2, 3, 4, 5 years to even start building a lot of these factories. The equipment and stuff they need, very specialized. It has to be manufactured. These things have to be assembled. They're almost like assembling some kind of think the complexity level of, say, a microchip printing, one of these lithography plants that they've been building in Arizona. It's taken them, 3 or 4 years to get those built. Well, that's about what they're going to have to do for critical metals in the rare earth regime. Okay, so rare earths, you got to start building that refining capacity. We abdicated our rare earth refineries to China, but we need to start building our own. Okay, and it's a long time. It's not an instant solution, but we have to do that if we want to get back on the saddle here. Unfortunately, I don't think a lot of people in our government understand the process and understand the complexity of the whole industry. Rare earth industry is not a very big industry. In fact, most of these metals that you see there, other than the lanthanum and cerium, which are used more in bulk, like cerium's used as a bulk oxide powder for polishing and stuff. But most of the other metals, samarium and europium and terbium and dysprosium and stuff like this, they're used in fairly small concentrations. Okay, these are not big markets. In fact, the total rare earth metal market is just a few $billions. Okay, it doesn't make any sense. People say, well, why don't we have refining? Well, because it doesn't make economic sense to spend hundreds of millions or billions of dollars on refineries when the market for rare earths is only a few $billions per year. So it's been so easy to let China do it, but now we have to see that tide turn. If we want these metals, we have to build those refineries. And probably it'll have to be subsidized by the government. It's a fact of the matter. How about other metals? How about zinc? How about copper? Why don't we have capacity there? Because we've shut down our smelters. Okay, smelters throughout the West have been shutting down left, right, and center. Nobody gives a hoot in society, which is such a shame. It is absolutely, critical to everyone's, you know, economy, their well-being, to have supplies of copper and zinc and silver, et cetera, et cetera, et cetera. Well, what have we done there? We've shut down smelters. Look, I don't think there's been 2 days that goes by this year where we haven't seen smelter shut down somewhere in the West. I think I saw a news release that something in one of the smelters up in Quebec is shutting down right now, copper smelter. This is scary. Okay, why are they shutting down? It's because the Chinese have overbuilt smelting capacity and have basically snarfed up all of the free concentrates around the world, leaving these Western smelters in a very uncompetitive way. I mean, basically, Western smelters cannot compete with the treatment charges, the negative treatment charges. Basically, the Chinese are willing to pay up. We aren't, and our smelters have gone broke. Okay. Critical metals, yeah. Is copper and zinc, super rare? No. But when your smelter shut down, you don't have that metal. Okay. So there's a different reason for every single element on this periodic table, why it's now being considered critical. Most of it relates to international politics and simply the distribution of refining capacity and mining capacity around the world. It's because we in the West grew lazy and basically handed over our responsibility to produce metals and mine metals to countries like China, and we shame on ourselves. Really, we only have ourselves to blame. All right, so that's my soapbox for today. I want to give you some updates. Let's move forward. All right. Sika, as we know, has been drilling, just prolific drilling in the Yukon this year. Just amazing discoveries. They've been drilling. Once they latch onto something, they tend to drill the bejeebers out of it, and that's good. Okay, so at this Rosgobble discovery, which is really one of multiple discoveries they have now across their RC project in the west central Yukon region, which is part of the Tombstone Belt. So this is a reduced intrusive. This discovery just keeps on churning out amazing drill holes. It's a little different than Snowline in some respects, but it's also very similar. And I think you'll see that here in a minute. All right, so today, or I should say this week, rather, they announced 7 additional drill holes. I think they still have something like maybe 55, 60 holes out in the lab, something like that. Sorry, 26 drill holes completed at Rosgobble. I think there's something like 56 across the entire property, but there's 26 additional holes, or 26 holes were completed at Rosgobble in 2025. And these results that we're seeing here came from that. I want to talk in detail about these. This is a reduced intrusive environment, so we see long intervals, tens, hundreds of meters of gram plus numbers. It's not exceptionally high grade, but very great metallurgy in these systems, as we know, and they make fantastic mines. All right, go to the next slide. In this image shows you the footprint that they drilled out at Rosgobble. This is the 26 holes that were mentioned in the highlights. And they're slowly, but they're getting their assay results back now. Labs are backed up. Patience is needed. Whatever, like what we saw about 3 or 4 years ago, or rather 5 or 6 years ago. I think the labs were exceedingly busy. Probably not quite that busy, but darn busy. Okay. Anyway, at Rosgobble, you can see they've drilled nearly 2 kilometer strike along this system that they've discovered. The bright colors are, of course, golden soils. The lines that you see there, those are the drill traces. So we're looking down. This is a plan view. Those are drill traces. And the little yellow stars are areas where they noted visible gold in the drill holes. And they got a number of holes back already that have assays. We're going to look at some on this section lines, A, B, C, D, E sections here just in a minute. But notice that they have many holes yet to come back. So there's a lot of holes here that have yet to return. And I think we're going to see a steady stream of news out of the company over the next few months. All right, so let's step through, starting with section A, and we're going to work from east to west as we go through this. All right, so go to the next slide. All righty. So here we are looking at section A. We're actually looking westward or northwestward-ish. And you can see this new hole. There was, there's other holes that have been assayed already. They're kind of in the lighter colors in the background there. And you can see, for example, the top hole there, number 5, I believe it is. Yes, 115 meters of 1.11 gram per ton gold. That's from surface downward. So basically the top of that hole, great results. Now we have 166, the next one down, 166 meters, 1.14 gram per ton. That's hole number 6. But notice that they have now hole 11, which is drilled further to the southwest and undercuts basically this area. Okay, so we have hole 11 that's now hit 126 meters of 0.89, a little bit lower grade, but still very significant gold for a system like this. This is easily likely economic mineralization. Now, what's a takeaway from this slide? Look, in my view, the system is open, down dip. Okay, in other words, to the left or to the lower left, this gold zone, which they've encountered in all 3 of these holes, appears to project further. That's actually pretty cool, because if you think about this in terms of an open pit, I can easily see there being a lot more rock to the left of hole 11 that could be mineralized to economic grades. And this is almost ideally situated, or suited for an open pit. If you kind of think of a V shape and you mentally put that onto this picture, you can see it's going to make a fantastic pit, relatively low strip, and it should take in a lot of tonnage. So this is a great profile, great discovery, and I think it's going to make a fantastic mine. Let's go to the next slide. We carry on looking at these sections. Now, what you got to remember, though, is that they don't have as much drilling on each section as they did on A. Okay, so in this case, B, we can see 2 gold zones here. Up at the top, there's a short one, 17 meters, 0.71 grams. But then down below, very long run of 246 meters of just under half a gram. And that includes a couple of smaller runs, 50 meters of 1 gram, 20 meters of 1.83 gram. Those are intervals, sub-intervals within that broader interval. Now, if you can imagine this area, that hole is actually drilled down dip. Okay, so that's proof right there that we do have additional gold down dip, and the gold zone would project to the upper right in this case. Okay, so if we look at this company and what they're going to do, likely do next year, is they're going to have to drill a succession of holes to the right that are above this hole to capture the same profile that they did in section A that we saw earlier. Okay, so basically there's a lot of blue sky to the right in this slide, maybe even some to the left, but this shows you right there. That's proof positive that the gold deposit continues down, let's see, 1, 2, 3, 4, about 400 meters below surface. That's enormous. Okay, we're talking about huge volume. All right, carry on. Let's go to the next slide. And here we are on the next section, CC to the northwest. Here, again, we've kind of shifted over and we're catching the gold zone where you see it expressed in the top of these 2 holes, right? Doesn't mean that it doesn't persist to the left in this case, but in this particular area, this is what they drilled. This was their interpretation. When they drilled the holes, they said, hey, let's test this area. And they caught the upper extent of the gold zone. My hunch is it projects to the lower left. Anyway, this section has some really nice numbers here. We got 107 meters of 1.01 gram in that top hole. That's hole 14. Notice that it ends in gold. Okay, so it probably did continue further. I'm not sure why the hole didn't carry on. Maybe they lost the hole. Don't know. And then the adjoining hole, number 16, that hit 154 meters at 0.71 gram, a little bit lower grade. Inside of that, though, there is 67 meters, 1.03 grams. So we're seeing that nice, long, continuous, robust gold zone emerge. And if it dips to the left, then we should see it carry on down dip for quite some extent, just like we saw in the previous section. All right, let's go to the next slide. Now, in this particular case, this is the next section to the northwest. For whatever reason, they didn't have the same vantage as they did in the previous slide or in the previous sections for drilling. So they basically drilled in the opposite direction. Kind of interesting. But they did test this area, albeit complete different orientation, and hit gold. Okay, in this particular case, they hit 297 meters of 0.61 gram in that hole that you see labeled. In my view, they're probably drilling not parallel, but probably sub-parallel to the gold zone, and then the hole above, which has assays pending, probably also drills more parallel, say, to that gold zone, which is dipping, as we know, to the lower left. So, what are we seeing here? Well, probably holes that simply test this thing more or less down the overall orientation of the gold zone. It's all right. Stuff happens out in the field. They probably encountered steep terrain or something that didn't allow them to drill holes in the same orientation here. But still, we're seeing a very robust, continuous gold zone that looks like it's projecting to the lower left or to the southwest. All right, let's go to the next slide. And then same here. Now you got a couple of holes that did, you have one hole that tested to the northeast, but then you have two holes that basically test southwest, probably parallel to or sub-parallel to the zone, which I think will be dipping to the lower left here. But you can see really good results here. So in the top, we got 254 meters of 0.4 gram. That's kind of low grade, but there's inside of that, there's 37 meters of 1.03 gram. But it's really this hole number 23 that I'm quite excited about, because there's a lot of gold stars in that. And I think that's more in the core of the gold zone that's dipping through this area. What should we see out of that? I would expect a pretty big run. That looks like a long drill hole, probably 300 or 400 meters that's probably going to run. And again, that's simply a hole that's oriented more or less down the dip of the gold zone. But same profile in each one of these sections. But what's remarkable is this thing is already 2 kilometers long. Think about that in your head. You got a gold zone that's 2 kilometers in length and still open on either end. Okay, we know it's about 300 or 400 meters tall at least, and it's probably about 200 to 300 meters wide. This if you do the true width, the gold zone that's projecting northwest and dipping to the southwest, it's about 200 or 300 meters wide. And you start doing the math on that, you get a lot of tonnage, guys, a lot of tonnage. So I think they made a major discovery here. On average and bulk, it's probably going to run in the upper 0.x gram, maybe 0.8, 0.9, 1 gram, maybe a little over 1 gram. Don't know, but that's my hunch. It's a great discovery, a lot of tonnage, and I think this is going to have a big gold endowment. All right, let's go to the next slide. Now, in the news release that Sitka put out, they've been doing systematic analyses now, more so, I should say, for tungsten, and in particular this mineral called scheelite, which is it's basically a tungstate. It's a calcium tungstate mineral that's kind of a light yellow or light gray color, and they often see it. I remember seeing it in drill core when I was up there in July, and the company's been able to use a black light, which is what you're seeing at the top there, catch the mineral. It kind of luminesces under a black light, and it's very easily identifiable. And scheelite is a very common mineral in reduced intrusive systems, but in this particular case, it seems to be relatively abundant, and quite frankly, could be a significant byproduct, okay, because it occurs in the same veins with the gold. And if you think about it, when they mill this rock, they're going to grind it up anyway. Scheelite, which is a very dense metal, dense mineral, I should say, can come out. They can, in theory, potentially recover a byproduct of calcium tungstate of scheelite into a heavy mineral concentrate, and that could be a very good outcome. They could, likely produce a scheelite concentrate, which is readily marketable anywhere in the world, and it is the main source for tungsten. Talk about critical minerals, critical metals. Tungsten is a critical metal. Why? Because the Chinese have dominated the tungsten market just like they have the rare earth market. And here we are. We found a deposit here. It's a gold deposit, but it could have significant byproduct tungsten along with it, which I think is really fascinating. If they develop the deposit with gravity recovery, which I'm almost certain they will, okay, there's a likelihood that this tungsten, which you can see here, they've got narrow zones of higher grade, like 7 meters of, 0.4%, 0.6 meters of 4%, and stuff like that. But they also have long runs, 75 meters of 0.13%, or 46 meters of 0.12%. These are great numbers. They're great numbers. And quite frankly, this will be, it could be a very valuable byproduct for this project here. So good on them. Let's go to the next slide. All right, now we're going to scoot over to British Columbia in the Golden Triangle. Give a little update here on Goliath. Goliath, as we all know, has many drill holes. I think something in the upper 80s of drill holes that are going through the lab right now. They did just a bang-up job drilling this year. I think they drilled 64,000 meters in total. They were targeting 60,000. They actually exceeded their planned drilling. And they drilled some very well-targeted holes. If you think about this system, what they knew about it way back in 2021 when they first drilled, and now what they know today, and they're able to basically start systematically infill drilling this deposit, which they did this year, in a very meaningful way. Okay, they went in, they targeted not just the Sherbet zone, but all the other zones. Think of the baklava model that I've used as an analogy for this. They've been able to drill all of the baklava, so to speak, in this year's drilling, and I would expect just a phenomenal succession of assays to come out of the company over the next few months. We're starting to see that in this news release. Here you can see the headline interval is 10.72 grams per ton gold, and it is just gold in this one. I think they're waiting on the silver and base metal assays. There's always a bit of silver, and there's always a little bit of base metal as well in this. But you have 10.72 gram gold only over 7.83 meters. All right, and that's I think it's inclusive, or no, it's including 20.37 over 4.1 meters. So there's a higher grade core to this, which is usually typical of this system. But think about that, 7.83 meters. That's pretty darn thick. Okay, in terms of underground mining, yeah, these loads are relatively flat, but these should be readily mineable in a modified room and pillar or something like this. The kind of thicknesses they see here are easily, amenable to bulk underground mining, which is relatively cheap. And I think this is going to make a fantastic ore body. 10.72 grams. What is that in dollar value? Well, it's like $1,200, $1,300, $1,400 in gold only right now in this day and age. So this is a robust mineralization. This is good stuff. All right, let's go to the next slide. Where do these hits occur? And there were a couple more in this news release. I've kind of tucked them in over here on the right-hand side. You can see 6.3 gram over 7.5 meters, 6.1 gram over 7.65 meters in those two images on the right. And over here on the left, you see a 3D image, basically we're kind of looking at the loads in profile, and you can see they're kind of crisscrossing. So you got the Sherbet style loads, which are the yellow ones, which are kind of dipping to the west. In this image, I think we're looking generally northward. And then you have the Bonanza loads, which are the purple ones down below in the Golden Gate veins. And they're dipping generally more flat or slightly to the east. So again, we kind of get this mishmash stack of veins, of sheeted veins. And these particular assays come out of the locations with the green flags. A lot of infill holes this year, lots. Okay, we're going to see a steady stream of news. But what's astounding is that every time the company drills through this stack of veins, they hit remarkable results. So I think the outcome is ultimately very good, and I think we're going to have very high confidence in their overall model. It probably will have to be modified a little bit as they learn, minute details about exactly where these intercepts are and what kind of gold grades they have. Yes, like any gold system, you kind of refine the model as you drill more and more and more. But overall, it's taking shape. It's just a remarkable lode system that, when you look at the scale of this thing, it's absolutely huge. Vertically, it's well over 500 meters. And then even down dip there, down plunge, as the red arrows indicate, you're looking at something that's many, many hundreds of meters from surface, down plunge on the Sherbet system, and then even down further in the Bonanza zone. I mean, that's an absolutely extensive gold system. Where's the gold coming from? Probably coming from these dikes and intrusions. Don't forget about the other styles of mineralization they have here. What they're showing in this slide is simply the Sherbet or the lode style mineralization, but they have the vertical dikes, which appear to be some form of reduced intrusive, and they have likely a magmatic driver for the system down below. Okay, some kind of an intrusion. They believe they've dated it as an Eocene intrusion. It's a little bit younger intrusion than many of the gold-bearing systems in the Golden Triangle, but it is a new model that seems to be becoming very prolific in this belt. So good on the company. They're doing a great technical job, and I think we have lots more news to come. Let's go to the next slide. Okay, this week, Westward put out an update from the next two drill holes that they received from the first drilling ever at this Campfire target in Nevada. And Campfire is located on the Toyabe Hills project. It is near the Cortez district, which is a prolific Carlin-type district in north central Nevada. Do not forget that the entire Carlin camps that we know and love. This would be the Carlin trend itself, and in this Cortez area, and in other parts of Nevada, have all been consolidated here recently. Not when I say recently, I guess it's 5 or 6 years ago. But Newmont and Barrick combined forces, and they have a joint venture that's operated under what's called Nevada Gold Mines. That it operates the Cortez district, and this property happens to fall along what was perceived to be off trend, but within that prolific district. But now we've demonstrated. I'm telling you, this is the significance of this intercept, even though it's skinny, is very, very important, because we've demonstrated significant gold, 3.1 meters, 2.5 gram per ton gold, for the first time ever in this area. This is a brand new discovery. People say, "Oh my gosh, that's not very long. It's not very high grade." The folks who know these systems, people in northern Nevada, a lot of folks contacted us right away. They were like, "Oh my gosh, there is actually gold. There's lower plate. There's all the ingredients we look for a significant Carlin system in this area for the first time." And if you think about our approach, it's been to drill wide space holes. I am a director of the company. I forgot to disclose that at the beginning. But look, we put out a video. The team at Westward's done a very good job of trying to communicate the significance of this finding. We did a video a few days ago. You can see the link of it there in the middle of this slide, and you can watch it at your own time. Just for note, a lot of the folks at work here are people I've known for many years. These are very smart guys like Kelly and Steve and Rob, who I've worked with before, way back, 30 years ago, even in Newmont, Barrick, and so forth. So you have about the smartest team in the world when it comes to Carlin type systems, and these guys know what they're doing. And let's talk about what they're trying to accomplish, or what we tried to accomplish this year. Let's go to the next slide. All right, so this image shows the property position over the Toyabe Hills area. There was a little mine to the west. That Toyabe Saddle Mine was operated, I don't know, several decades ago. It's probably 30, 40 years ago. So there was a small Carlin-like deposit just west of our property, and the Cortez area would be to the northeast from here, quite a ways. This is perceived to be well off trend. It's maybe 8 or 10 miles, up to the Cortez Hills mine, something like that, further to the northeast. But this piece of ground, as I've talked about in previous episodes of the video, this is a critical piece of ground that I think has rafted away or broken off from the main trend. And I think it hosts a sizable chunk of prospective lower plate hunting ground. Okay, now why do I say that? Well, that data that you see in the background, that very pretty colored data, is basically showing us gravity data. So it's basically showing us that there is a block of rock underneath this area that seems to have a bit higher density. Well, that's characteristic of lower plate rocks, of the carbonates that we're looking for. Okay, so there's really good geophysical data that says, hey, there's a missing block of rock here. When I say missing, I mean part of the greater lower plate window that we have at Cortez seems to have broken off, and it is underneath this area. And we developed this target. You can see it's shown in the circles here through various geophysical techniques. So ZTEM, for example, defines two anomalies, kind of circular in area. But it's really the entire block here that's underlain by this gravity anomaly. And so I consider the entire thing part of the overall campfire target. And we've drilled a number of holes this year. We've released now 4. Okay, so holes 1, 2, 3, 4, which are shown in kind of a teal blue. I kind of use the colors to help highlight them so they're easier to see. I think the news release had just plain X's or something. Anyway, I've put teal dots there to show the holes that have been assayed now. And then the purple holes are holes that we have yet to get assayed. So we're going to see assays come from this program that we're doing this year, or did this year. Hole 10, which is the furthest east, it's kind of in the middle of the purple dots there on the east side, on the right-hand side. That one is in progress. It's nearing completion. Look, this is where it gets interesting. In fact, it got so interesting that I went out to Nevada to see drilling when they were in the middle of around hole 4, I think it was. And you'll see by the assays why. Okay, they started to see some very interesting rock. Now, holes 1 and 2 didn't deliver much. They didn't have much. But holes 3 and 4, guess what? They have our first signs that there's a big gold system here. Now you say, well, gee, these polka dots look close together. They're not. Okay, these holes are 500-600 meters apart. If you look at the scale over here on the left-hand side, that's 1 kilometer. Okay, so these drill holes, we basically drilled wide-spaced drill holes across the entire target area. Think of it like casting a net out. Okay, and this is what I think you have to do in Carlin systems these days. To test for these blind systems, you just got to drill wide-spaced holes as a first go and see if you hit something. It's like fishing for a whale. Okay, you've got to think the scale of a whale to find a whale. So we've basically drilled wide space holes here to try to snag or jag just a little bit of gold or something somewhere. And we did. It's astounding. Okay, so not only have we demonstrated, yes, there's lower plate rocks here, we've demonstrated there is gold in those. So we're going to look at the next 2 slides, which show the traces of holes 3 and 4 and the anomalous metal that we're seeing in these holes, which could be leading us into a new discovery. Okay, go to the next slide. All right, so what are we looking at here? We're looking at the drill trace. Over here on the right-hand side, you can see the drill hole and the rocks that were encountered. So the colors represent different rocks. The browns and oranges that you see towards the top are upper plate rocks. They're rocks that we call silicious. They're basically considered unfavorable for hosting Carlin-type systems. They can host anomalous metal, like arsenic in particular, or antimony or mercury, like you're seeing here in these little histograms that are with the purple, blue, green, and yellow lines. But you tend not to get much in the way of gold up there. Maybe a little bit of anomalous gold. But it's the blue section, which is the lower plate. Those are the carbonate rocks that we so keenly target in the whole Cortez area as well as the Carlin area. We're trying to find those lower plate rocks to find the suitable host for gold mineralization. And anytime you hit gold in lower plate rocks, you got to take it seriously. And in this case, in hole 3, we hit, as you can see down there in the gold line, we hit a narrow but significant interval of gold. We're talking 640 ppb, maybe 695, and it's over just a few, like 10, 20 feet or something like that. Can't read the numbers, but it is significant for Nevada. This is appreciable gold. Notice it occurs coincident with arsenic, as well as an elevated zone in antimony, and mercury, and these are characteristics of Carlin systems. Okay, so this is our first whisper, if you will, of gold in this area. Really, I think this demonstrates the first evidence that we have that there is significant gold. Okay, but it gets better. Let's go to the next hole to the east from 3, which is hole number 4, and look at this chart. Now we're starting to see some grades pick up. Okay, again, upper plate, lower plate. So you can see we drilled down through the upper plate to get into those lower plate rocks. And as soon as we got into the lower plate rocks, guess what we saw? We saw appreciable gold, in this case, high assays of 2.086 gram per ton, and then 2.9, almost 3 gram per ton in one interval there. Those are really good numbers. Okay, and overall, I think there's about 10 meters or so of about just under a gram in that interval. That's more than anomalous in Nevada. This is starting to show us that we're in a system. I mean, a real bona fide Carlin type system. Again, we're casting a wide net. What does this mean? Well, it means that maybe somewhere in this neighborhood, we will find that magical, gold rush type target. What does that mean? Well, the gold rush system and some of the other systems in this area are kind of flat tabular things. And they're anywhere from 10 to 20 meters thick, and they grade 8, 10, 15 gram gold per ton. It would be very easy to see the gold grades as we continue eastward, or maybe northward, or even southward from this area into those areas where we have more purple holes. Bear in mind, we have lots of assays coming back, and we might see even better grades by the end of the day. So this is our first indication: multi-gram gold in a Carlin system. We're doing good science, stepping into this system with a big, wide net, casting it, and we're seeing gold, arsenic, antimony, mercury. We're seeing all the bells and whistles over a very discrete part of the wind band section in the lower plate rocks. I think this is an amazing new discovery. People in Nevada told us right away, holy smokes, you've got gold over in the Campfire area, in the Toyabe area. Yes, this is a new discovery, guys. Now, it could take on different shapes. There's the flat tabular deposits, like I talked about at Gold Rush. Finding a sheet-like deposit like that would be a wonderful outcome. You could find a few, maybe 10, 20 million tons of half an ounce or something like that. That's certainly a viable target in this country. But there's also other targets too, like the Cortez Hills deposit is more of a vertical or chimney-like deposit. And we might be near something like that too. Okay, time will tell. We're doing more. We've got more holes to come through the lab, but we're doing hole 10, for example. We've seen notable changes as we go eastward in our drill array that tell us something's warming up. Okay, I think just my queasy gizzard says there's more news to come out of this story. We'll be very anxious to see more assays come back. Let's go to the next slide. All right, Alpha. We haven't heard from Alpha for a long, long time, but Alpha has been ramping up their news, or getting some more news out of Aberna. Results over here on the left, not any barn burners here, but some long intervals, 21 meters, 1.2 grams, 8 meters, 1.2 grams, etc. But what really caught my attention here recently, John Wilton joined Alpha. I've known John for a long time. John is a very astute explorer, and he is joined as CEO of Alpha. I think this is an absolute great outcome. John knows Africa. He's worked in many places across Africa and has made discoveries. Quite frankly, he's well known for discovering gold in Namibia, for example. But he knows how to operate in countries like Eritrea, and I think we have between the geologic team that they already had, and with John, I think we have an exceptionally talented team here that's going to really unlock the value at Aberna. As we know, it's a gold system that's part of the Nubian Shield. It's on the African side of the Nubian belt. And quite frankly, it looks a lot like the gold system up at Sentiment in Egypt. So I'm very keen on what they're doing here. I think John's the right guy at the helm. Don't forget that they also have the Anagulu target as well. It sounds like they're even going to go back into there. But this news today is on the burner. Let's go to the next slide. And here's just a quick section, shows through hole 52 area and start to show a picture of continuity in the gold zone. It is near surface. That's very important here. So we basically have something that's shallow, open, pinnable, and appears to be coming together in some meaningful form. Don't forget, there's a lot of strike on this thing. I think it has the potential for hosting, 1, 2, 3 million ounce system across the length of the property. They've only tested a very, very small fraction of the property so far. And we're seeing what appears to be respectable open pit style grades and stuff. Pretty good grades for an open pit, 2, 3, 4 grams up to even 7 or 8 grams in places. All right, so good on them. Systematic drilling, and they're doing a great job with their new leadership. Let's go to the next slide. All right, Newfound put some news out. They are back to drilling. Yes, they've secured the maritime mill, which is a big step. So that kind of leads them down a path of production, which is great. But at the same time, they are doing some exploration. And in this particular case, they drilled way up north along the Appleton Fault corridor, and they've encountered gold in this dropkick zone, which really includes, if you look at this news release, there's several zones mentioned here. There's a dropkick zone, the dropkick east, the Appleton Fault corridor, and then the Blue Jay zone as well. And in each case, they've hit significant mineralization. Okay, this is way to the north of the traditional Queensway target area. So now we can say, hand to heart, yeah, there's some really nice gold zones taking shape further to the north. Let's look at the next slide. To put it in context, this image shows you their entire consolidated property position, and this dropkick zone, which is way to the northeast from the traditional Appleton Fault zone, which is in that red box lower center. This is a long way along strike, guys. I can't emphasize enough how far this is. It's like 7 or 8 kilometers to the northeast. So it's really amazing to see super high grade occur over such a length here. And it makes you wonder what's happening to the southwest. Why the company hasn't chased it in that direction yet, I don't know. I think they're gearing up to do that, but right now they've chased it to the northeast, and we're already seeing them deliver. Let's talk a little bit more about this dropkick and Blue Jay area in detail. It's starting to look like a significant replicate deposit of what they see further to the southwestern. Go to the next slide. You can see as we zoom in, they found some high grade areas that are open. Okay, these pink areas define the gold mineralization they found to date. Blue Jay and dropkick are both probably justifiably could pull a pit. And I think each are going to be expandable over time. But great high grade, 11 meters of 20 grams. These are outstanding holes. 9 meters at 29 grams. I mean, these are crazy. Nice grade for open pit. It's insane what they have here. 2 meters at 84, and then 16 meters at 2.94. That's very good too. Down at Blue Jay. Let's go to the next slide and look at it in profile. Okay, so here you can see what I'm saying. Do they need more drilling, more tight space drilling? Yes, over at Blue Jay, especially, which is towards the to the right here on this image. There's a lot of area between dropkick and Blue Jay. There's even a few drill holes that have hit gold in between. So yeah, there's room for expansion here, but you can see right away that at dropkick, they have gold extending down, and it looks like a little over 250 meters below surface. You got 3.95 meters of 47 gram per ton gold, one of the deepest holes there that has come back. That's a big system. Okay, that's a lot of plunge, a lot of strike and plunge along this system. This could be a significant new discovery that's taking shape. All right, so kudos on the company for continuing to explore. Let's go to the next slide. Irving, I am a director, full disclosure. Irving put out news this week from, or I should say, I think it was this previous week, from the Omu project, which is up in Hokkaido. It's a gold-silver epithermal vein system. And we're working with a partner, JX Mining, which is the largest mining house in Japan. JX has been a strong supporter of pushing this project towards becoming a silica smelter flux, basically a gold, precious metal rich gold, I should say, bearing smelter flux that can be utilized by the smelting industry in Japan. Okay, so this is a little different model. We're trying to find quartz-rich rock or silica-rich rock that has gold, appreciable gold and silver in it, that can be mined and utilized as smelter flux in the Japanese smelting industry. All right, go to the next slide. And what do we have this week? Well, at the Omui area, earlier this year, we drilled some very shallow angle holes. I've never seen drilling like this in my life, but the Japanese like to do things this way. They have drill rigs that are capable of drilling relatively flat angle holes from surface. Okay, so over here on the right-hand side, you'll see in cross-section some of those low angle holes. Over here on the left, that's simply like looking down on the plate of spaghetti from the top. So we're looking down at the drill holes and the assays that we have. But I think what tells the story is over here on the right. Okay, it's looking at the holes in profile. And you can see that even though this isn't a deep section through the area, it's really, say, a thin veneer of, 50, 60, 70 meters of mineralization. It shows that we have likely open pitable grade gold mineralization across this area. And this is ideally situated for silica smelter flux material. Okay, there's good gold grade, good silver grade that you're seeing here in all of these holes over a strike, like from right to left, is over 200 meters. Okay, so we're seeing a very sizable volume. Do we have to do more drilling? Probably, some more drilling, but I think we're starting to see a picture here where we could easily capture in a small open pit silica-rich rock that has precious metals. Okay, this could be direct ship material that could be used for smelter flux operations across Japan. Again, okay, now we have another target. This is Omui, but we're going to now go over to Omu Center. Go to the next slide. And here there we go. We drilled some vertical holes. These are steeper angle holes, but we drilled some holes mainly to test for groundwater. We were actually doing well testing and stuff like this to show that the material that we'd like to mine, the silica-rich material, is above the water table. I think we've done that adequately now. But we do capture the gold assays and the silica assays as well, which you see over here on the right-hand side. And again, just a remarkable, in this case, it's a flat deposit, a flat sheet-like body of silica. The pink values down there at the bottom show the silica contents. It's 95 to 100% pure. Okay, this is amazing stuff. It's right at surface, starts at grassroots and continues down. And it's not got huge gold numbers, but it's got some gold, 0.x gold, and usually 10-ish, 20-ish grams silver, which in every respect is going to make great smelter flux. Quite frankly, this could be blended with the stuff from Omui, and you can produce a product here for many, many years to ship to the smelters across Japan. Okay, so different model, economic model, but this is really looking good. I think we now have demonstrated that we have mineable occurrences in both locations, and I think JX, our partner, is quite happy with the outcome here. Let's go to the next slide. Okay, SK, I'm a director. I feel like I'm talking about companies I'm a director of here today, but that's just the way it is. A lot of news coming out of several of these companies that I'm associated with, and SK is one of them. SK did field work this year, no drilling, but they did a lot of sampling and mapping and so forth, prospecting really, over the southern part of the consolidated SK property. And this area, a few years ago, generated some phenomenal beleg anomalies, stream sediment anomalies that showed there was some kind of big gold system here. We did not get a definitive answer in the early days about what was generating this anomaly. But the crew that we've had in here over the past 2 years, both in 24 and 25 now, have collected many rock chip samples and shown that there are very high grade veins. Now, what is this? Is it a VMS like we see up at SK or SK Creek or something? No, this is different. Okay, these veins, in every regard, they look a lot like the veins that we see down, say, Goliath. Okay, they're sheeted, relatively flat veins that are quartz sulfide, quartz carbonate sulfide, and they have very high grades. All right, so it's a very interesting outcome. There is an Eocene intrusion here, just like they see at Goliath, and now they see up at Juggernaut as well, the big one project that Juggernaut has. Okay, what does this mean? Well, I think this is one example of several that are starting to emerge in the Golden Triangle of these Eocene associated gold systems. So there's what appear to be reduced or quasi-reduced intrusions popping their nose up across this part of the Golden Triangle, and they in their own right are generating gold vein systems that are younger in age than the traditional view of gold in this region, okay, but are significant in their own right. Okay, and you can see here rock chip samples, many of which we have in the ounces per ton, I'll say, so bonanza grade. Some have good silver with them, some have also copper, significant copper. Okay, let's talk about this a little more. Let's go to the next slide. Okay, so this area shows the areas that were sampled and were discussed in this news release in the little red boxes. And we have the Vermilion and TM zones, which we'll talk about mostly, which are up in the upper left. And then they found a new zone. The prospectors that we have, really sharp guys. They work for Ken Conkin over at Goldstorm, which is the company that's working in experience at Crescat and so forth. So they have a really good sense of how to prospect in this kind of terrain. And they did a fantastic job for us. Really appreciative of the help they provided this year. You can see at Vermilion and TM, what catches my attention right away is that you have this just very intense cluster of high-grade samples that is kind of dancing around these remnant glacial fields. Now, those glacial fields are melting back like a lot of the glaciers in this region. In fact, every year that we go up there or people go up to this area, the glaciers seem to be receding in a big way. I wouldn't be surprised if in a couple of years those are completely gone. But you can see that most of the gold is tucked in and around those glacial features. Okay, so what are we dealing with? Well, a recently exhumed high-grade gold system. And yeah, there's a cluster of samples here that's just jaw-dropping in grade. I mean, just phenomenal grades. Where's the center of gravity? Don't know yet, but there's more work to be done, and I think we're starting to see some drill targets emerge. Let's go to the next slide and look at a zoom in. Okay, so the first area, which is over here on the left, is actually the TM zone, and then the Vermilion is over here on the right. I probably should have switched them around, but it is what it is. So you can see the TM zone there. We're seeing a long stretch of samples just off the east end of that glacier. Really high grade. Some of the samples came back previously in previous news releases, but even in this one, look at that 297 gram just to the east of the glacier. We got 106 gram per ton. Wowza, and even on the north end of the glacier, 22 grams and 9 grams. I mean, these are phenomenal numbers. I mean, there's something going on here, and I think we're starting to see a place where we have enough sheeted veins, enough stacked veins that we might have a discrete high-grade target that we can drill test next year. So that's getting exciting. Then over here at Vermilion, again, phenomenal numbers. That 217 gram per ton gold, 65.7. I mean, these are astounding numbers. There's even a lot in the 6-10 gram range sprinkled around. Again, though, there's a kind of a critical mass of samples that are showing up. Shows us we have a sizable target or potential target emerging in the Vermilion area. Probably a couple of targets, really. And I think as we go back year after year, we'll see the glaciers recede, and I think we'll see this thing really open up. But we do have, testable drill targets starting to emerge, and I think we'll see drilling here next year. All right, so exciting stuff. Go to the next slide. All right, we're getting there. We're getting there, folks. Now, Inflection. Inflection has been chasing copper and gold with their partner, Anglo Gold Ashanti, in New South Wales in southeastern Australia for better part of 2 or 3 years now, I think. And they got a fantastic deal down there. They're not losing focus. I've talked to the company. They're not losing focus at all on what they're doing down there, and they've got Anglo spending money there, so it's a really, really good outcome. But more recently, they picked up some tenements up in the Northern Territory. This is way up in the north part of Australia. And they picked up these tenements on the recommendation of a geologist that joined them recently, who came out of we'll say the Newmont acquisition of Newcrest. And when that happens, just like any time there's a merger like this, there's often projects and properties that are cast aside. Well, one of the geologists that came out of that merger now works with Inflection and said, hey, you guys really should approach Newmont about picking up this package of targets or package of properties up in the Northern Territory. And they did. Okay, they did. And they've been doing work there. This country it's not, down around the Olympic Dam, but which is in South Australia, but it has the same kind of geology. So we're talking about IOCG, iron oxide copper gold systems. And what they have up here is a series of targets. They're all geophysically driven, or I should say, by and large, driven by geophysics, but that showed characteristics of IOCGs elsewhere in Australia, and that includes the Ernest Henry deposit, Olympic Dam, Prominent Hill. There's a whole bunch of examples sprinkled across Australia. Okay, so what are we talking about? Well, we're talking about bodies of iron oxides that form through hydrothermal processes, but often have copper and gold associated with them. Iron oxide, copper, gold. Okay, and these things, some people say, oh, they're magmatic related. Yeah, there's probably some kind of association with thermal heat coming off magma, maybe, or something. But they seem to be unique unto themselves, or their own type of systems. They seem to be driven by deeply circulating fluids that kind of go down into the deep part of the crust and scavenge metal, particularly copper, gold, and even uranium, and then bring those up to shallower environments and form these amazing deposits of iron oxides with copper and gold. What do we have here in this package? Let's go to the next slide. Okay, so why did they target this area? Okay, first of all, where is it? Okay, the claims are shown in the little gray boxes, and they're over near an area called Tennant Creek. Tennant Creek is a famous IOCG camp. There's several deposits there, all of which are very, very high grade, extremely high grade, and often quite compact. There are a few millions of tons, like 1 million up to maybe 10 million tons ish, but they're very high grade deposits. And I would say the geology that I see here is very reminiscent of Tennant Creek. But then you have further to the east there, you can see that over into Queensland, northwest Queensland, there's a well-known IOCG camp there, as well as sedimentary lead zinc camp that you have, and Mount Isa and Ernest Henry represent that area. So we're kind of in a belt, I guess is what I'm saying, an east-west belt from Tennant Creek over to Mount Isa, Ernest Henry, which is good hunting ground. All right, so let's zoom in on those. Next slide. All right, so geophysics drives the exploration here. What are you looking for when you're hunting these types of systems? Well, in this case, we're looking at magnetics. Okay, so magnetic data, reduced to pole data, RTP. And you're looking for little blisters, okay? When I say little, the scale on this thing is immense, okay? If you look at the bar down there in the lower left, that's 50 kilometers. So this is a huge tract of land. And those little areas where there's discrete blister-like features, like very prominent, very high amplitude features in magnetics, those are your targets in an IOCG hunting ground, okay? You want to find those, and then you literally go in. You have to usually test through, drilling through cover and stuff like that to get to your target. but these are the things you sharpshoot. And these guys have a number of very high quality targets. You can see all of the little blisters, the little discrete anomalies that are sprinkled across this land package. Yes, there's been some work here. There's even been a little bit of drilling that already has found IOCG mineralization. While this is early stage, I think this is fantastic. This is a fantastic portfolio of very high quality targets that the company has to test. So kudos to them for recognizing the opportunity and getting a deal done with Newmont. And now they basically have yet another world-class, in my view, world-class opportunity to go out and hunt for the next great IOCG camp here. All right, so these look very intriguing, early stage, but lots to look forward to. Let's go to the next slide. Okay, I think this is the last company, Brixton. Brixton made a new discovery. I talked about this, it seems like ages ago, maybe 2 years ago. I flew up there and I flew up to see Camp Creek, but I noticed there was a very large alteration system adjoining Camp Creek further up, in elevation from Camp Creek that appeared to be its own porphyry, its own right. And the company has drilled this target now. So the catalyst target has proved to be a porphyry center. It's interesting. It's not particularly super high grade, at least not what they drilled so far. But it is a new discovery in its own right. Okay, so let's talk about it. Let's go to the next slide. All right, you can see Camp Creek is way down here in the lower left. It's a little yellow circle. That is the known porphyry that's been drilled and pretty thoroughly at this point. I think we have a pretty good understanding of the footprint of that system. But as you go up the creek to the northeast, you can see the Catalyst and Tempest targets. They did drill at Catalyst this year, and I think they got one hole at Tempest, and they managed to make a new discovery at Catalyst. So the footprint of the copper anomaly is shown in green there. Let's look at what the drill holes hit. Let's go to the next slide. All right, here we go. So the anomaly that we see over here on the left is chargeable anomaly, and they really just kind of pricked the outer fringe of this anomaly with these first couple of holes. Notice they're not very deep holes. They're going to have 300 or 400 meters, but when we're talking about a gigantic porphyry system, they're really dancing around the edge of the system. They do have two holes assays pending, so we got hole 347 and 351 yet to look forward to. Maybe they'll hit something more, I don't know. But the holes that came back in instant release are the ones that you see along section A, B, which is illustrated over here on the right. Okay, so the holes 343, 338, 341, they have all hit long runs, fairly continuous mineralization of both copper equivalent, I should say, grade. So you basically, don't forget, you have in this country, you have copper, a bit of gold, and even moly in these holes. So it's copper equivalent grade that you're seeing here. And there are some higher grade zones within these. So I don't want to dismiss the potential for higher grade mineralization here. But, what is this going to turn into? I'm not sure. I mean, if they go over and let's say we see higher grades in hole 347, which is where the chargeable anomaly seems to be stronger, they might have something, sizable near surface. It might be a game-changing story. But right now, definitely see a lot of anomalous rock in the ground here. All right, let's go to the next slide. I think that might be it. It's a longer update than I thought. Nope, that's the wrong way. Okay, that was it, guys. Okay, I should be. Oh shoot, I think I'm traveling next time too. It's like endless travel this year, but it's been enjoyable to give you the updates this session, and we'll look forward to talking to everybody more closer to Thanksgiving. So have a good fall. Take care.
All right, thank you, Quentin. So lots of exciting things going on in our activist metals portfolio, and great updates, Quentin. Thank you. Really love what's going on at Sitka, especially. That is our third largest position in the fund, and Goliath, our second largest position across our funds and the firm. So really good to see those strong results. And so the market today, this was a live market call. We had a pretty significant sell-off on a Friday. The market did come back up and close pretty much unchanged on the day, which was very fascinating because we're kind of on a the 50-day moving average, and and we've had this what potentially could be exhaustion gap, meaning final push up in the market to new all-time highs that seems like it's poised to fail. And if we break those 50-day moving averages, it's a long, it's a good ways down to the 200, that next level of support. Fortunately, with this black swan style put option strategy that we're playing in the global macro and long short funds, we were able to cash in on a lot of those puts when the vol exploded and the market was down this morning. And so it was nice to be able to take some of that off the table and then reload a bit. And as we came up to do a full retest, it's like a self gap fill on one day. So for all the reasons we've been talking about for the past several weeks and months now, we do think that the market is ripe for a much bigger downturn. We've seen 4 Hindenburg omens now in a couple of days, and over the next 2 months, when that happens, there's a decent probability, especially with these other indicators that we have fundamentally, that we could see a significant correction, and we're still positioned for that in the global macro and long short funds. Tavi, do you have any comments?
No, I this was I think was the worst week for the Nasdaq since April, I guess. So it's definitely a shaking moment for those that are overweight in tech space and others. But we're certainly seeing resilience in the metals market right now. Fascinating that now after the sell-off we saw from silver, especially, and now we're settling at that 47, 48 level, getting ready for another move, which I think it's very important. And we have the mining companies also do extremely well today, despite this volatility in the market. And oil is also making a potential comeback, which I'm a firm believer in that. So commodities overall continue to look very strong. So that's the important aspect here. But anyways, all right, if you have any questions about Crescat, you can ask Merrick. Get in touch with Merrick. The email address is on the screen. There's also a telephone number, and he would be happy to share more about Crescat. All right, thanks everybody. We'll be back in 2 weeks. Thank you.